Hi, good afternoon, everyone. So ours is the last panel, and I believe we have a very interesting and a unique topic, which is ULI, Unified Lending Interface, and its role in enabling credit access to MSMEs. So, before before I pass on the mic to my panelists, and they can obviously introduce a bit about the topic and also what they are doing. So we have a fair mix of panelists today from bank, NBFC, two people from who are working closely with the government from fund, from SIDBI, and also somebody who is working on policies. So in terms of the financial landscape in India is constantly changing, and with our near target of being a 5 trillion economy, we believe that credit access is very essential. And ULI being positioned as a technological platform can enable that. Currently, there is a you know around 15 to 14 to 16% have access with an estimated addressable credit gap of around $400 billion. So there, we believe that which ULI can help address that, because it is also sourcing not only financial data but also non-financial data. It is like an open architecture with open APIs where financial institutions can just plug in. It's like a plug and play model, and the lender can once the lender gets a request for a loan product, the lender can fetch data, and with the help of FS and non-FS data, alternate credit underwriting, the credit access can be much more simpler and faster. So over to my panelists now.
Yeah, hello, I'm Saravana. I represent SRI, Self-Reliant India Fund. It is a sovereign fund of Government of India under Ministry of Micro, Small, Medium Enterprise. And this fund was started near about 3 years and 4 months back. And mainly to help the COVID time, most of the MSME entrepreneurs, they had a challenge for the working capital and even running the firms and giving the remuneration to the employees and others. So to mainly to help the MSME ecosystem during the COVID time, this particular scheme was launched by the Government of India, and 10,000 crore seed capital. But we normally fund one time means 4 times money has to come from other investors. So basically it's a fund of fund, a mother fund, and we empanel the AF1 and AF2 category fund, which is approved by, registered by the SEBI, and they in turn invest in MSME ecosystem all over India. Till 31st December 2024, 3 years and 4 months of operation, this fund has assisted near about 10,100 crores of MSME ecosystem all over India, mainly to the manufacturing space and various vertical, and so it's created near about 1 lakh 15,000 employment generation. Out of the near about 27% is a female, and this fund has a life of around 15 years plus 1 plus 1, 17 years total. And so when normally this fund give equity, then if you look at the four, one time money comes from SRI, Self-Reliant India Fund, 4 times money comes from other investors. Could be the domestic investors, domestic institutional investors, the domestic family offices, or ultra HNI, or could be global sovereign funds, or global family offices, global endowment funds, and others, university funds. So that way the fund has attracted a lot of money from overseas also coming into the Indian MSME ecosystem. And so basically the equity, normally if we take a thumb rule, is a 1:4, 1:3. One time equity means 3 times credit. So that means effectively the 50,000 crores will come in period of around 7 to 8 years time. So that means near about 3 times of credit means near about 2 lakh crores money will be coming into the Indian MSME ecosystem for a period of 7 to 8 years time. Since this SRI fund is life is near about 15 plus 1 plus 1, 17 years. So near about 4 lakh crores of capital, including equity and debt, will be reaching the Indian MSME ecosystem. That's the objective of the Government of India for this particular fund.
Yeah, good afternoon. Thank you for having me here. I'm Arijit Dutt. I represent SIDBI. I am presently working in the venture finance and investment vertical, which works from Delhi. We have been operating number of fund of funds focused on startups, including the 10,000 crore fund of funds for startups, and we have some other products, loan products for venture debt. But just coming to the this on this topic. I mean, as a credit officer, throughout our career, the main challenge for anybody to lend to an MSME or a small enterprise was the asymmetry of data. And SIDBI, as a apex level institution for the MSME sector, we have continuously tried to work out solutions for addressing this issue. So we started with a portal called Udyami Mitra portal, where banks could bid for MSME loans and lend to them. And but of late, our focus on formalization of the out of the around 6 crore MSMEs, most of them are not formalized. So we've been working on their formalization for 3-4 years now, and that has progressed with the vision that ultimately something groundbreaking like the ULI will come and address that core issue of the data asymmetry, or where the borrower does not know what kind of paper he has to submit to the bank for his loan. So sort of democratizing the access to credit. So these are the important and really sort of revolutionary outcomes which are expected from this platform being released by RBI. So continuing that, in parallel, of course, we have developed something called the FIT score, which is based on finance, income, and trade, and sort of predicts the probability of default for us for an MSME over the next 1 year. We can merge it with the CMR rank which CIBIL gives for MSMEs. So all this has helped us to launch something called the Express Loan for MSMEs, where the process are purely digital. Similarly, our subsidiary, our sort of associate company called PSB Loans in 59 minutes. That was another initiative we took, where we used GST and income tax data to give in principle approvals for loans to MSMEs within 59 minutes, as the name says. So this platform, or the interface which will provide financial as well as non-financial data, I think it solves almost all the problems. It has potential to solve all the problems of credit access and assessment, and I think it will cover a lot different types of borrowers. So the assessment models cannot be the same for all kinds of MSME borrowers or the entrepreneurs. So there are people who, you cannot use the same debt equity ratio or debt service coverage ratio for everybody. The kind of businesses, maybe at the street vendor level, what he does, his cash flows, or how to structure a product for them, compared to something maybe for startups, like we do lending to startups who may not have profitability. So there we have developed an alternative format using these digital trails and data. So, sum and substance, that it's something very exciting. It solves credit officers' problems. And of course, it's going to lead to a lot of innovation in new products, customized products, and ease of lending for financial inclusion to the MSME sector and new entrepreneurs. So I think that's about my take on this.
Thank you, absolutely. Because even if a borrower does not have the required, as you said, the collateral or the document for taking a loan, ULI can solve for that. It gives that holistic, overview of the borrower. Yes, Mr. Shekhar.
I think SME is the backbone as far as India wants to become a 5 trillion and then a 10 trillion economy for all of us. And yes, I think there is foundation, there are providers, and there are users. So I think I represent the entire user category, where you utilize the entire information which is available in the entire ecosystem. Partner with, I think, each one of each of the networks which has been laid, each of the infrastructure which has been created. Partner in developing that infrastructure wherever required. I think use that to ensure that I think we ultimately provide the requisite finance advice solutions to SME. Overall, I think a 30 lakh crore market size for all the MSMEs, and we do know that that is only 14% of the total size of the lending market. World over, I think if India what is aiming for, the number has to move from 14% to on an average 50%, 50. And so the journey for us, all of us, I think over here is 14 to 50 is ULI the entire solution? Is there a few more things which has to be done? Is the entire part? I think very happy to participate, partner, and learn. I think as I'm here.
Thank you. Thank you so much.
Hi, good afternoon, everybody. My name is Amit Sharma. I represent Aditya Birla Finance Limited, NBFC. I have about, say, total about 22 years of experience, and I've been fortunate to be part of, in fact, every DPI initiative of the government. Started with UPI, built a complete stack for the UPI for the one large private sector bank. Account aggregator, and you name the initiative I've worked, and I am now fortunate to be the part of the ULI initiative also, as well. So I'll share something very interesting about ULI. In fact, I was discussing with Prithwish before this panel as well. So when the initiative was announced last year, so when I read the initiative, I thought that this is not something, kind of a big thing. This is not a big innovation that RBIH has done. The reason for that was basically I have been a man of implementation, and I thought that what ULI is going to solve is only basically is becoming a one shop for all the services. So they are basically hosting all the APIs under one shop. So eventually, when I will go and integrate each of the APIs, I have to integrate separately. That is one. So there is only the handshake will be common for me. So that is some effort that will be solved. But the legal, the commercial will also have to be bilateral. The ULI will not play any role. So that was my initial belief or thoughts. And then very recently, we did a hackathon in collaboration with RBIH. So basically, the objective was that how do we actually, use ULI to expand our credit reach, or how do we solve the problems that we have. So we had about, say, 75 fintechs participating that hackathon, and we threw about, say, 10-15 such problems that any lender will have. And out of those, in fact, some of the very interesting problems that got shortlisted that will be solved through a ULI. I'll just name some of those solutions. So regional language, leverage solution to provide real-time translation for multiple Indian language for better customer communication using Bhashini at the back end. So today, as a lender, I have to go and communicate with the customers in a different part of the country for offering loan and collecting loan. And at both of this 2 points, what happens is that there is a language barrier sometimes. So can I solve it using the solutions of Bhashini? Yeah, Bhashini is now available on ULI, so, and a lender can go and integrate. That is one. Second is measure of customer intent to pay. Now with the bureau, we know what is his history, what is his habit, but nobody knows what is the intention. So one of the fintech which is working along with the ULI and we as a lender, so we are trying to develop a psychometric analysis for the customer to before we disburse the loan, we also measure his intent to pay. So see that these are some of the interesting solutions that we are trying to solve through the ULI. And credit underwriting using alternate data. This is again one. There are lot of solutions. I'll take a lot of time if I keep talking about all of those solutions. One last solution is credit underwriting using alternate data, which Prithwish spoke about. So today we have large number of gig workers in the country today. How do we lend? Nobody wants to lend them because their job is not stable, and today they are in Delhi, Mumbai. They can be going back to their native. So RBIH using ULI has large amount of alternate data on these gig workers, which we can actually, as a lender, can go and utilize and lend. So there is a lot of opportunities, and my belief is that JAM, UPI, and now ULI put together, I think this will take us to the next level completely. Thank you.
Yeah, thank you for sharing your insights.
Hi, I'm Shivank. I'm from the Digital India Foundation. As mentioned, I'll be focusing primarily on the policy aspects of the entire discussion, specifically what we're going to be looking at in the near future from a policy perspective and what considerations we need to have moving into that, right? So the primary idea of ULI like makes sense to most people, which is to say that it optimizes significantly. But the key challenge for most people, of course, will be how frictionless it is. And that is what will determine adoption, that and trust. Now, the extension that we're going to draw from, like at least in this discussion, what I'm going to be focusing on is three things, right? The three policy considerations that we're focusing on is the first, which is strengthening consent in data governance, which is very relevant considering the DPDP. And also, like previously existing architecture that we've had, as you mentioned, the account aggregator framework. The second is consumer protection in terms of their data, in terms of potential prevention of misuse, stuff like that. And finally, like digital ecosystem compliance as a whole. So how does the credit ecosystem work with this, and what compliances we need to work on moving forward?
Thanks, Shivank. So my next question is to Mr. Shekhar. At Kotak, you take special cognizance in differentiating SME offerings from your competitors, and you've also launched Kotak FYN, which is a single login comprehensive business banking platform, and you've been able to reduce that by almost 50%. Yeah. So how do you see ULI further enhancing the experience or helping banks provide access, especially for MSMEs, which is our topic today, considering only, as you said, 14 to 16% of SMEs have sufficient credit access?
So I think if you were to, I think having lent almost 110,000 crores, I can tell you, I think what SMEs want and what SMEs are way to the lag. Also, I think what is available in the ecosystem and what is required from the ecosystem. What is available across the world, and what are a few things I think which can come in. I think ULI becomes one of the important parameters which helps us to grow the entire ecosystem there. Example, at 110,000 crores, if you are trying to grow on an average 25 to 30% per annum when the industry is growing at 10 to 12, definitely I think there's a significant work on digitization. There is a significant work on turnaround time. There's a significant work on, I think, trust and security, very, very important. A lot of work on training and, I think, ensuring that each of the people get, I think, what they want. There's advanced use of I think, artificial intelligence and machine learning to ensure that you can predict, I think, how much money will be required, where can there be challenges, and I think how you can actually go ahead and support your partners, I think, across. But more importantly, still I think availability of money still remains as the biggest need of the ecosystem which is there. ULI is one of the ways in which it gets facilitated, but assessment of each of the enterprise with, I think, the two big initiatives, I think, which will be happening, and as it becomes more robust, will become a very important parameter as you want to, I think, move forward. From our side, I think we are able to provide input with respect to data, which I think ULI becomes rich. Availability of money, which is, I think, we'll go and underwrite, I think, many things based on the advanced underwriting tools which is there. I think our AI ML tools actually ensure that you are able to do it, I think, a bit more, a bit smarter, a bit better. It has to be, it is a continuous exercise. Today you may be good, but you have to be, I think, continuously at it. But I foresee that I think something like a ULI and many of these things will become an important part as you want to grow the entire ecosystem from what I said, that on an average 14 to 16% to almost 50% to become a 10 trillion economy. And there is a significant work, I think, which is required by each one of us in terms of facilitating that. I'm very optimistic that I think we have the right tools in place in terms of the digital framework, the rails which are there in India, as well as the lending framework, I think, which is coming in, as I think we move forward and contribute and utilize.
Thank you. As rightly said, so not just necessarily being a better credit appetite, but ULI being that tool to enable faster credit access and more reliable tool, right? Uh, so next question to Mr. Amit is, you know, as a leading NBFC like yours, you're leveraging a platform, as you show some insights as well on ULI, and you're working with RBIH. So it's not just not just offering these loan products, but also potentially opening up avenues or for other cross-sell products as well. So also, at Aditya Birla Capital, there was a recent news article on being one of the first NBFC in India to offer full FS stack to lending, insurance, investments on the ONDC platform. So do you think that ULI can help, leading NBFCs like yours unlock more value for your ETB base and also result in higher acquisition of new customers?
Absolutely, Prithwish. So it becomes very, very important for financial conglomerate like us. So I'll tell you. So I'll tell you the practical problem, and then you'll understand how that this ULI is going to solve the cross-sell piece. Actually, as what you spoke of. So today, when we do a cross-sell pitch to the customer, so we don't know whether he actually has a need for that cross-sell product or not. Why? Because it is like a hit and try. Even the digital journey that we have created on Udyog Plus, which we have about say more than 2 million SME registered on that platform. We have embedded cross-sell wherein with the loan we are offering him EMI product and products like health insurance and stuff like that. Then we are asking is on during the journey. We do not know whether he wants it or not. And we have a huge amount of data which is residing in our data warehouse, and we do not know what is the next best product for the customer. Now, using the ULI, I can, with so much of financial and non-financial information about the customer being there, I will be able to communicate the customer the right product rather than just doing a hit and try. Right. I think that is the way forward with the ULI.
So right fit for the right customer, yeah. So Mr. Shivank, someone, as you said, you're from the policy lens, being mindful of laws, like you mentioned DPDP as well, and the potential impact ULI can have on the consent framework. So what do you think, what are the key considerations and measures from a policy perspective in terms of consent, customer consent, which is, which is very critical, and the customer protection while participating in ULI?
So considering, as mentioned before, like the amount of sensitive data that's probably likely to be available, the considerations have to be like manifold, I guess. But the primary idea is that DPDP actually solves for a lot of this because it's intended for similar purposes. Like it's intended for prevention of personal data proliferation, right? And a large part of that comes down to consent management, right? Like specifically what kind of consent, which is to say informed consent at all points of time. But more importantly, that like there is also a lot of, let's say, fatigue with respect to a lot of like terms and conditions that people sign on for. And especially for financial instruments, like an easier way, and this is something that's been discussed with the DPDP, is to streamline them so that if there is anything, like there's a boilerplate, so to speak, that is relevant and people don't necessarily have to go out of their way to focus on specific, let's say, issues. Right. So only if there's something that is out of the ordinary or some consent is asked that is something specific to a financial instrument or something like that, then that person is likely to just catch that out as opposed to reading through an entire terms and conditions. Aside from that, there's also supposed to be like seamless revocation rights, which was a very big deal because earlier for specific data, there's a lot of hassle with respect to deletion requests, with respect to communicating with like MSMEs and platforms for like communication regarding their own data. And I think that's a lot easier now. And then there's also the regulatory oversight. Now with respect to the application part of it, we have the potential, let's say, already baked in with respect to the account aggregator framework, which we've learned that data flows might like need to be user-controlled, lender-neutral, and transparent. And extending from that fintechs and NBFCs shouldn't have unchecked control. And that check of control is going to be the primary focus moving forward for most like policy-focused people.
Thanks, sure. Mr. Saravana, my next question is on on the your some insights on you also gave right on various government initiatives on how SRI can benefit. So considering you are a fund of funds, how is it assisting various industry sectors and various geographies, especially from the MSME perspective?
Ours is a fund of fund. Self-Reliant India Fund is a fund of fund. Basically, it's a university. It is known as a mother fund. So we empanel AF1, AF2 category of funds in the domain. It could be, it's mainly in the equity today, venture capital equity. And till date, we have empaneled for last 3 years and 4 months, we empaneled near about closer to around 59 funds. And in turn, we have dispersed, from our kitty as well as from the other institutional investors and other HNIs and family office kitty of closer to around 10,000 crores. And the objective is the money to reach not only that 3 main regions where the VCP domains are dominant, NCR, whatever, Bangalore or Mumbai region, but we want to reach out the entire global region. And our, whatever we are focusing more on the manufacturing space, but today there good amount of percentage, out of 453 MSME unit what we have assisted. Good percentage in the manufacturing space and some extent in the agriculture space, agri-tech space, and some are in the service sector also. And the point to be noted, like Septo and Lenskart, Cello World, these are our funded companies, which are actually migrate from the MSME ecosystem to the large-scale category today. And so even the micro, small, medium category, if you take, there are some good migrations, upward migrations happening after we start funding it. And as we mentioned, near about some out of 453 MSME unit what we assisted in the venture capital equity, and near about more than 75 funds are run by the women entrepreneurs. So basically, being a sovereign fund, it has a socio-economic objective also. Not only the looking for the return of equity or return of investment, we have to look for a job employment plus helping the, reaching this money in the less known geography, now other than these 3 main domain, NCR or Bangalore or Mumbai, it's reaching out to even domain like, even the Bihar or maybe Orissa or even the northeastern part of India. These are some of the objectives what we are given. And the second objective is, creating more employment and even looking for some export opportunity also. These are the major domain. And we empaneled, as I told you, we near about 59 funds we empanel. There are some funds are, institutional promoted venture capital fund, like IDBI Capital promoted fund and ICC Venture Fund, NABARD promoted NAB Venture Fund, then SBI promoted in a new fund. Like that, we have funded some of the institutional promoted fund also, including Gujarat Venture Capital Fund promoted by GIC, Gujarat Industrial Investment Corporation. And plus many funds are the professionals who have experience in the VCPE domain. And there are, most of the funds, funds who have empaneled. And we closely monitor their investment also and give the report to the other, stakeholders, including Government of India.
Thank you so much. My next question is to Mr. Arijit. As SIDBI, obviously you're playing a pivotal role in enabling credit access to MSMEs. You have also managed the Credit Guarantee Fund Trust, so wherein you're basically giving a collateral, as in a credit guarantee to MSMEs along with the government, thereby more encouragement for the MSME sectors in terms of lending. So while it is understood that MSMEs typically, we discussed also, they find it difficult to meet collateral requirements set by various lenders. So how do you think SIDBI can play an important role in ensuring plugging the gap between credit needs and the collateral waivers for such loans through platforms like ULI? And do you see also any specific challenges ULI platform can address for MSMEs?
So this credit guarantee scheme, just for some background, it was launched in 2000. So it's about almost 25 years, and recently we have crossed 1 crore guarantees in terms of numbers and huge amounts. Every year the amount of loans and number of loans guarantees has been, in literal sense, exponentially increasing. That's the way it has got on. So how it works is that it does not give the guarantee to the MSME. MSE actually, it's now for micro and small enterprises at the moment. So the the entrepreneur's loan gets sanctioned by the bank. The bank is a member lender institution of credit guarantee trust, and that loan is guaranteed by CGTMSE for the bank. So that's how it works. So the challenge, what the ULI will solve for is that it will, in the absence of appropriate decision-making formats or methodologies or underwriting processes, the focus of a lender goes more towards collateral. But ULI will, as everyone agrees, that it will spawn many alternative, as credit assessment and underwriting methodologies, and that will improve the, credit decision making. So a lower collateral will probably be facilitated, and the collateral will not just be demanded by a lender, just on the base of covering the entire loan amount. So to that extent, this kind of refined data will definitely and that coupled with credit guarantee will enhance the credit availability to an enterprise. So it will be a much more refined and sophisticated decision making which will be facilitated here. So I think credit guarantee will be an important plug-in. So this combined with the proper decision making through data, non-data, non-financial factors, and that will be able to sort of multiply the capacity of that corpus to reach more and more small enterprises. So I think that's how the role will play out in future.
I think if I were to just add to that, if you'll require, I think, standards of valuation being uniform across, ensuring, I think, what property is acceptable and at what in what norms, and to have those norms being standardized will be a good amount of effort which will be required amongst all the partners who lend, so that I think then it becomes a common commodity for it to be assessed and then I think taken. And guarantee will be a most important thing which will say that if guarantee without conditions with I think a few minimum ones is when I think it will get facilitated the most. So in my mind, that will be the most important thing for ULI to succeed if it and to take off.
Of course, yeah, absolutely. Standardization is very important, and in future maybe co-lending model can maybe because banks having access to the one platform ULI. So since we have another 6 to 7 minutes, any thoughts on maybe I don't know a future state of ULI being maybe I don't know it can in future be a front-end platform for or a marketplace or customers accessing asking for loans to the ULI platform. Any thoughts on what can be future form factor?
There are two things which I would like to share here. So, see, I'll give you some insight on the digital lending side. So today when we lend to a MSME digitally, so there is a very fraction of the customers, MSME customer would get a STP loan. What we say is a 1 minute loan or 2 minute loan is actually a very fraction. Eventually, more and more customers who actually come on the digital platforms, they end up getting underwritten through a manual underwriting only. Only there is only fraction, because why this fraction is because the green or super green kind of a journey is technically possible today with all the DPI initiatives of the government, but the data is not available, and because of the deficiency of the data, we don't know the customer as a lender. I don't know the customer fully, and that's why I want to know more about him, and that's why I ask my a credit underwriter to do a further evaluation. Now what ULI is going to solve is basically the large number of the fraction of what green and green super green decisioning which is happening today, that will increase the decisioning percentage.
Right.
And I see today with the ULI, maybe a few years down the line, we'll have a huge number of customers getting a STP loan within few seconds or within few minutes. So that's the initiative I see on the platform side.
Right. Yeah, absolutely. But not just in terms of better credit decisioning with the help of such a platform, but yes, a faster disbursement of loans is also the idea, because we know MSMEs are always facing cash flow challenges and they would need loans, not just the required amount, but on time as well. So yes.
So I think if one were to see the three biggest requirements of SMEs, one is requirement of money, which is second, I think you require technological support for them. And third is, I think most of these places, I think it is a single individual which does everything. So they do require, I think, a lot of facilitation for whatever they want to do. It can be a simple accounting, it can be a tax filing, it can be loan, it can be many more things. So any new tool which comes in has to ensure that it is able to meet these three requirements. It should be able to provide them money, which is required by them. It should be able to do it in a smart and a technological manner, and without taking the time or a bandwidth to ensure that they can meet the requirements. Can ULI meet that requirement? I think my take will be yes. It has to be developed, facilitated in that particular manner as you want to move forward and do it. The need for money is high. The base data are getting worked up, and I'm so happy that I think the institutions are putting enough effort to ensure that the base data becomes better and better. Yes, I think it becomes over a period. For individuals like us, I guess we have a transaction history which is easy. For institutes or for these things, I think a GST data, a payments data, a banking data, even I think electricity bill payment, I think are important data points which determines that how the business is going to, how the business is building up. So I feel, I think, extremely positive about such platforms which will ensure that I think these things get facilitated.
Sure. Today, when we lend a MSME, as he rightly said, so today we are able to lend him only on the basis of this bureaus. So we have his financial history of, and sometimes we don't have it. He could be a new to credit, and how do we underwrite this customer? So can there be a just kind of a bureau report? Can there be a report for other activity of the of the customer? Absolutely. As he rightly said, surrogate history like electricity bill payment, rent. There are so many other his travel, his other assets.
Merchants accepting POS payments, the POS transaction data.
Yeah. So those are the things which actually will help. ULI will help.
What we're discussing in terms of alternative mechanisms is actually what we were looking into as a primary policy consideration, because once we started looking into the ULI as something that we need to work on governance for, we looked at alternative models, like where else is something like this, like a unified lending interface possible. And while we couldn't find an exact comparison, so to speak, there are quite a few models, and they have very different governance structures. Like, for example, Southeast Asia has a lot of funding societies, and they follow a very similar model. So they underwrite, it's almost on human, which is to say that there is pre-existing some discourse around this person based on this whatever industry that this person is a part of. And it's almost like another person underwriting this person. And so, like trust-based mechanisms, alternative mechanisms, and all of them come with their own set of problems. So whatever we go forward with will be interesting.
Great. Thanks, Shivank.
No, I think I'm very excited about the kind of innovations which can take place in underwriting, and it will ensure very informed borrowing also from the borrower's side. Sometimes at the base of the pyramid, you have in so many instances of over leveraging, over indebtedness. I think that is another fallout which will be protected. So the innovation that is likely to come out in the ecosystem on account of this is really very exciting. I think that's the.
Great, thank you. I think we are closing the day with a panel discussion with a lot of, I believe, good news or positive news for MSMEs. I mean, we see the panelists here who are lenders or working with the government or funds and policies very optimistic about it. So yeah, probably we're closing the day with good news for MSMEs. I think somebody had his hand up. Thank you. I think we are out of time. So thank you. Thanks for the audience. Thank you to my panelists for joining the session today. It was interesting discussion. Thank you, everybody. Have a nice evening. Thank you.